Oh boy, guys, it's time to wrap it up for today. And thank you, Jerome Powell, for messing up the markets. Right at the end of the last update, we got this big bar starting form. And I should have known Powell started speaking and he said stupid shit, you know, predicting higher inflation and longer term tariff impacts and stuff like that. And the market, of course, very predictably sells off, and then there's absolute fall, lean in on the downside. So, as I said this morning, when they start taking out this area of support, the 5340s, lean in on the short side and see how far they can take it. And so far, they're down here at the 5250s. So there you go. That's a good move. That's a good trade. I can get in on that one. And I did not. I took a Nasdaq trade a little bit later in the say a little bit later down here, but that's a pure momentum play. And I realized how volatile it was. I figured I'm not going to try to push it because even if it's looks pretty straightforward, unless you get good trade location, it's easy enough to get stuck in a little snapback like that and that shakes you out. So and it's not by any means a given. However, though, given looking at what we got in front of us right now. And thank you, Mr. Jerome Powell, for doing that. Now we are right back. All the little strength we had is gone. We have taken out this 5300 edge. We are holding below it. So with that, we start off on the short side of the market. That's the kind of the default thing to do. See how far I can take. It could be a snapback going into the close, but I mean, if I would have probably seen something. There hasn't been any lift at all in it. So news, everything was kind of okay news-wise and so on and so forth until Powell spoke, and then everything went yes down in the toilet. Now tomorrow morning we have a little bit of news. We have housing starts, jobless claims, Philly Fed at 8:30, and that's about it. And that's the last trading day before the Easter holiday. So just the what do we have? We have a no, that's about it. So not much else. So a pretty slow news day tomorrow. So it's going to be interesting with this kind of sell-off where we're going to end up. I will start off on the short side of the market. Look to sell strength up to that 5300 level. If they can get up above that K, 5315, K print up there, may take off the short bias and look more range bound trading. These are the two levels, 5320 and the 5300s. We talked about this morning that was the last one we were going to buy against if we got early weakness. But in the afternoon, after we had that fairly decent strength throughout the day, there was absolutely no reason to buy against those on the way down. So as they took out that 5340, and that's what we said in the last update. And below that one, the hanging on the short side. See, try to get short, see how far you can take it. They're all the way down here to that low at the 5250s. That's just frustrating. So anyway, that's what happens. The markets are selling, a pile-on effect, algos lean in on it, and that's what happens. Now, this is very tradable, though. If you just have to be very cautious about it. So you don't want to chase it on the way down. I did that on the Nasdaq. That was a pure momentum trade, but Nasdaq moves differently, and Nasdaq has bursts a little bit harder. But it's sometimes you get caught in that kind of move as well. But basically on the way down here, the best entry was up here against the tablet. The first rotation up here against the 5310 11s. Give you a small trade, and then they knocked you out. And the third time they started to take it higher, that was your entry. That was really the fake out on the upside. So the first, you can see it, if it ran it up here for one time, knock it down. They retest it, and if you're going to get short aggressive, this is a good spot. That would have been just a break-even trade because you went down, right back up again. And then the third time, then you couldn't do it. That's when it really started leaning into it. So tradable, but man, watch for the fake outs. Difficult. And at this point, it looks like we finally find a little bit of release here, but I mean, they're still just up against the tablet level. So again, potential short setup here for rotations down. We'll see. Get last half hour. I'm not trading the last half hour. We'll see if they're going to get worse or not. But I would stay on the short side of this. Look to sell strength at this point against the 5270, 5275s, 5285s, 5300s, up to that level, the 5320s. So those are the levels I'm looking for short setups against for rotations back and down again. They get back up below they get up above the 5315 to 20. Look for potential retracement trades at that point. So let's see how this goes. But at this point, I mean, going into a long weekend with this kind of news hanging over you, it's just not going to be good. So expect weakness, and here you go. If you got short at the tab, at least you should be at break even by now. So 68 to 62, 61. So snapbacks, you try to get short on the way down here. These snapbacks get you knocked out. So it looks to me like they're getting to a point where they're actually going to find some level of support. And let's see how far they can take it on the downside. But a nice retest of these lows could set up a little retracement trade into the close. Could be. I mean, just watch this level, but there's no rush to get long in this area. Absolutely no rush at all. And if you do, you keep your stop tight so you don't get knocked out or you don't get stuck in a big trade. All right, looking at the bonds and the Nasdaq now. The interesting news. I mean, before I do this, I usually fold my overnight so you can see here how bad this got. Now, looking at the Nasdaq and the bonds, so the bond market is trading higher. So flight to safety, kind of dynamic going on there. They're up here against the 115.20s. No, sorry, 14 to 15. And I would stay on the long side on the bonds. Looks like they are trying to take this higher. So the fact that the bond market is trading higher, yields are coming down. That's a welcome sign. The bond market is behaving a lot better. So there you go. So we are back up here, heading get up in this low volume area at the 115, 115. Yeah, 115. So that right above it now. So if they can keep going, we may see them running it back up to the 117s again. Small attractor right here at the 16s, and they'll have volume attractors to look at. But that's kind of the bond markets. I would start from the long side, looking to buy weakness, 1509 to 10s, 1502s. Below 115.02, I'm going to take off that long bias. So just to get started, slight bias to the upside. Now Nasdaq, look at that thing. So I took one more trade on the Nasdaq. That's right there, and you can see. I mean, that was late entry. I was looking for them running down to that 100% extension level. And I've had this, they were going back and forth pretty hard there. I had moved my stop outside that rotation right there. So fairly big stop. As I got my $50 out of it, I just got out of it. And I realized it's just too volatile, swinging back and forth quite violently. And this one right there would have got me out anyway. So if I hadn't done anything, I would have just been shaken out for nothing at this rotation. And then it locked it down. I was super tempted to hop on the tablet here. This didn't quite make it up there, but this little rotation took it right up here to that level. I just, since I got my $50 and I got my back into the green, I figured I'm not getting too aggressive on this. And look at that thing after that. They took it all the way down here to the 15150s. So on the Nasdaq, ugly freaking day. And Nvidia was started off to the downside, and they were really down. So Nvidia right now is down $10. Ugh. Man, that's down 25. Yeah, everything is down, and it's just ugly. So they took out this edge through 350. So if they can get up above this edge again, the 350s, we may be back up range bound. But I would look for short setups up to that level right now. So on the Nasdaq, looking for short setups against the 250s. There's going to be one edge. I'm going to drop this edge down here. So it's going to be one edge right there at the probably like at 230s, and one here at the 280s, and then one up here at the 370 to 80s. So if they trade up above this K period, and then we may go back and look for a retracement trade, but looking for short setups against these levels. Now the edges, as I said, you can see that the edge right here at the 240s right now. We'll see if they retrace that further. But right now that looks like an edge right here against the 280s, and then of course up here at the 380s. So looking for short setups there for rotations back down to get started in the overnight, and let's see how this whole thing shakes out. Now, it looks like we're getting a little bit of lift now. Maybe we are getting some bargain hunting kicking in, because this moved to the downside. If Powell's saying something, it's just speculating about how bad it can get, and the market does this. It's just, it's just irresponsible, I think. It's like, you know what how market's going to react to what you say. So if you don't know how it's going to play out, don't say anything, But no, I'm going to say something, and I'm going to really put the market in a tailspin, and then it's just don't get me started. Anyway, so gold to the upside. I had two gold trades earlier on, one loser and one small, and one shakeout. I'm down 40 on gold. And since then, they've been steadily grinding higher. So my expectation of them running this low and retracing the overnight did not happen. they took it higher, and they're up here almost at the 33.50s now. So stay on the long side of gold, definitely on a tear to the upside. So look to buy weakness at this point against that low volume area at the 33.50s, against that mode, 33.45s, and then against that 33.40s on the downside here. We're going to have to mark that up in the overnight there. We're going into tomorrow. And then looking at the at oil, just going range bound. So range bound oil at this point, they're still to the upside a bit, so we'll see where they end up. Tomorrow is going to be the last day on this on the May expiration on oil. We're rolling to the June expiration after the weekend. So after the close, going into so for Monday we are trading the June expiration on oil. Yes, you remember that. But range bound oil is slight bias to the upside, given that they've been holding on to this pretty good. And then that's pretty much it for now. Let's see here. Let's go back to the ES real quick. Go back to the ES. And all right, a little bit of lift. They took out the tablet. It looks like they're tracing a little bit. Let's see how violent this gets if you get some lift here. That would be a bargain hunt rally to getting us back into this range above that 5,300 level. As I said, then we start range bound, but I'm not counting on it. But then again, yes, the market is the market. We'll see what it does. Alrighty, guys. So far, 1 and 2 trades on gold, down $40. 2 trades on Nasdaq, down $40 on gold, and then up 52 on Nasdaq. So on net $12 less commission. So there we have it. Anyway, we'll see you guys back in the morning, bright and early, and that will be the last trading day before the weekend. So see you back in the morning. Later.